Hi, everyone. I'm Maggie McGrath, senior editor at Forbes. U.S. stocks are in the red on Thursday following President Trump's reciprocal tariff announcement. The Nasdaq, the Dow, and the S&P have all been down 3% or more in early Thursday trading. Joining us to talk about the economic impact of these tariffs and also the market reaction is Andrzej Skiba. He is the head of BlueBay U.S. fixed income at RBC Global Asset Management. Andrzej, thank you so much for joining us on what is one of the busiest days for the market of perhaps all of 2025.
It is indeed, Maggie, but pleasure to be here with you.
So let's start with where we are right now with the markets. It's just red everywhere you look and has been all morning, really, ever since the tariff announcement became official yesterday afternoon. What's your reaction to what we're seeing in public markets?
Look, investors were shocked by the extent of the tariffs, and particularly looking at some individual countries that were hit with tariffs well in excess of 20-30%, that really played with investor imagination. So we're seeing a pretty sharp response in the markets today as many ponder whether this is big enough of a hit to U.S. economy, to U.S. consumer, to start talking about recessionary risk ahead.
We'll get to that recessionary risk, but one of my questions for you is you've released commentary earlier this week saying that you've held the view since the election that Trump is serious about tariffs. And I think investors broadly shared that perspective. So what accounts for the magnitude of today's losses? Was it that the details of the tariff plan were relatively scant up until yesterday?
I think there are two factors at play here. The first one is that while many investors we spoke to over the recent months believe in tariffs being a real threat, most expected them to be piecemeal, targeting maybe specific sectors rather than entire countries, and also at rates that are lower than what was announced. Many investors we spoke to also questioned how much of an inflationary pressure we could see as a result of those piecemeal tariffs. So I think the first factor that led to such aggressive reaction is the realization that those hopes of a small tariff package, something very specific to an industry or two, were essentially naive, and the market was complacent in assuming a mild version of a trade escalation. The other reason why we think we've seen such a strong reaction is indeed because of the magnitude of tariffs on some key trade partners for the US. The fact that we're not seeing 10% tariffs, 15% tariffs, but in many cases 20% and above, that really played with investor imagination. And even though when you look at the details, they suggest that not only Canada and Mexico are exempted for now, but also quite a number of goods categories are exempted for now. Just the sheer magnitude of individual country tariffs really pushed sentiment in a negative direction.